Hi friends, this is Kishore. Welcome back to my channel. Today I would like to do gold price analysis as recently gold price went down slightly 7 days. Will it continue the downtrend or will it take a support and bounce back? This is not a financial advice, just a knowledge purpose only. Let's jump into the show. So this is a gold chart. It's a weekly chart. If you see here, it break down that my 1900 support level, and right now it is the price is below 1900. And the next support I see here is 1760. But I would like to see why gold price went down sharply. So one of the reason is dollar index. Dollar, it's a dollar index daily chart. If you see here, it's a V-shaped recovery from 99 to 103. It went up sharply in 10 days. So that's one of the reason why gold price went down. And the next one is 10-year treasury yield. 10-year treasury yield also went up sharply from 3.5 to 4.2. These two, both dollar index and the treasury yields add huge pressure on the gold, and that's the reason the gold price went down. And this is Fed funds meeting probabilities. So next couple of months they may not rise the Fed fund interest rates, and from the next year, maybe in the May, they may start cut down the interest rate. But this is based on this meeting probabilities. That's what it is saying. But last week when the FOMC meeting notes came, it mentioned they may all the Fed chairman and the other leaders are expecting there may be one more rate hike in this year. So I put all together in this one chart like dollar index, Fed funds, and the gold. In the past, when Fed funds are rising, dollar also went up and the gold price went down. And when the Fed funds are near to the pause of the interest rates, the dollar started going down, and from there, gold price went up. So I'm expecting the same here. So sooner or later, the Fed funds start pause the interest rates, and the dollar index will go down sharply sooner or later, and from there, the gold price went up, will go up. And this is a gold future. It's a seasonal chart. If you see here, the seasonal chart, both August and September, the gold prices are going down. After that, it's like a double bottom kind of thing here. If you see here, after that, it can go up and made a new higher low, not the lower low. It's a higher low in the October. From there, it went up to till December. So based on this chart, we can expect there may be a double bottom in the September also, to take the same support levels like 1760 or 1800. From there, it may go up. And this is CFTC report. It's a weekly report. It came on August 15. So this will help us to know what the short-term trend is. So I look into this managed money section. So if you see here, they reduced their long positions and they added the short positions. But still, if they added 27,000, the short position is lower than the long positions. So in short term, we may see some more selling pressure on the gold, but in the long term, they are bullish. And this is last 10 years how the major commodities did, like silver, gold, copper, and steel. So the gold stand tall, like it went up almost 37%, and silver is negative like 2%. And this is central banks chart, like are they selling, are they buying? So central banks are one of the major purchaser of the gold. So last couple of months they sold the gold, but again they started buying in June, which is a good sign to the gold bulls. And this is the former jewelry investment demand helped offset slower central bank buying in Q2. So as we saw in the previous chart, the central banks are not buying much, and they are selling few, and they just started in the June. So jewelry fabrication, they bought huge in last couple of months, that helped the gold price to stay above 1800 level. And this is euro rate change in global liquidity chart. If you see here, the global liquidity is right now it's negative, means there is not, they're not increasing the uh, money supply in the market in last couple of months by this all major central banks like US, Bank of Japan, Bank of Canada, Bank of England, and the Euro. And this is global yield matrix, why they are increasing the interest rates, why they are making the global liquidity tight. The reason is mainly the yields, the short term yields are greater than the long term yields. If you see here, 1 year is 5.36 and 2 year is 4.94. So if you see here, all these are in the inversion. That's the reason right now the global liquidity is very tight. And on August 9th, Moody downgraded the banks, almost 10 banks, small and mid-sized banks, and they also warned some of the national biggest lenders for potential downgrades. Means they are also looking into the some of the major lenders. They sooner or later there is a chance of they downgrade their ratings also. And this is the GLD chart. So right now it is at 173. 175. If it comes to the 173, which there is a gap here, once the gaps are filled, in general, once the gaps are filled, the trend reverse. And also it is a 0.6786 Fibonacci golden ratio level, and I see it also acts as a previous support and resistance level. So I'm expecting it may come down to the 173 and then shoot up to the 179. And one of the reason I'm looking at the support at 173 is it's a CC is also in the oversold region. And this is another one, GYLD. This is also very near to the support level 15.33. So, and the CC is the oversold region. If it comes to here, my next resistance levels are 18 and 20. That's all for today. Based on all this, my analysis, I'm expecting gold may sooner or later will take a support. And as we see the seasonality chart, there may be some more bearishness in the September. From the September mid to, it may start going up. So that's all for today. Hope you like this video. If you like this video, please hit the like button. Please hit the bell icon so that you'll get notification when I upload a new video. Please watch more videos in my channel and subscribe if you like them. Please share this video if any of your friends looking similar kind of content. Thanks so much. Bye bye.